To be able to welcome you to the first Breakfast Forum for 2015. So thank you for being a part of it. My name is Trudy and I'm part of the TDI team. Who's at their first TDI forum? Quite a few hands. That's good. Who doesn't really know what TDI does? Anyone gonna? Oh, you all do? That's usually most either you haven't heard of us and don't know what we do, or you know what we do but you can't really explain it. That seems to be the general gist. Well, thank you very much for coming. So TDI started back in about 2013. We came out of a pilot project through Donkey Wheel Charitable Trust. And Bessi and Paul have been working on TDI for a long time before that, but that's when we officially launched. And we speak a lot about blended value. We're trying to get across this message that blended value is a possibility and a reality. Who would say they understand blended value and know what that is? A few less hands. That's all right. You're going to hear a lot more about that this morning. But so TDI loves to come around social enterprises, whatever stage they're at in development, and build this capacity in team, in business model, track record, and get them to the place where they are investable. And then we can match them with impact investors and help to deliver this social and financial return without compromising on each, which we think is a possibility and a reality. So we want to thank NAB for being one of our partners and sponsors in this. We're really excited to be able to offer our forums free all of this year to have these conversations. We also are partnering with Digital Storytellers, which is the team up the back. You'll notice there's a few cameras around the place. We are streaming this live on the TDI website, which is very exciting. I'm hoping it's streaming live. I'm not sure if there's anyone who's... Yes, I'm getting thumbs up. So apparently it is working, which is good. So I'm going to take this opportunity to say hi to my mum because this is the closest I'm going to get to an Oscars acceptance speech. So I'm going to say hi, Mum. She's watching from her workplace. If you can be tweeting about this morning with the conversation, hashtag is the real problem. We're also going to be taking questions during question time from people on Twitter who are coming in. Bessi and Paul do a lot of travel overseas, having these conversations with people in Europe, Canada, New Zealand, all over the place. So we're excited that those people can be listening in this morning or this afternoon, wherever you may be. We're really excited to be able to offer that invitation to be a part of it. So we'll have question time later on. If you don't really want to get up and ask it, you can always tweet it and we'll get it that way. If you can turn your mobile phones off, even though you can use them to tweet, turn them off, that would be great. Toilets, if you need, are just out the door and to the left, head on down. And so I think that's the officials. I'll invite Paul and Bessi up. Bessi is the CEO of TDI and co-founder, and Paul Steele is the CEO of Donkey Wheel Charitable Trust and Benefit Capital, all of which you'll be hearing a bit more about at some stage this morning, and they're going to take it through this morning. Thanks, everyone.
Thanks, Trudy.
Thank you.
Thank you all for coming bright and early. It's great to have you all here, and we're going to talk this morning about something that Paul and I have discussed a lot over the last few years, because we're quite passionate about the fact that if we don't actually powerfully name the problems we're trying to solve, it then becomes trickier to design solutions that are effective in trying to address those. So that's the idea of today's forum. I think that all of us agree and have certainly experienced that there are a stack of social and environmental problems that we're trying to address, and that government and philanthropy alone are not equipped to be able to fully deal with these issues. And so the conversation often then comes up around trying to understand who's responsible for dealing with social and environmental problems. And I would be keen to know what your response to that question is. Who do you think is responsible ultimately to try to address and deal with the social and environmental problems that we face in society? Anyone got a response? Who needs to be dealing with that? Lee? She's a good woman. We'll pay her later.
We're supposed to do that after a few people have given some other answers, Lee.
Any other responses now that you know that that's the one we wanted? Often, particularly in a place like Australia, you'll get a response around government, that there is a responsibility of government to be addressing these problems. Or even slightly broader, but the response can often also be the not-for-profit sector or the social sector. We are in the camp that Lee is in, and are firmly of the belief that it's everyone's responsibility to address and start to deal with the problems that we're facing. We tend to, around this topic of social and environmental problems, even if we say, yes, we all agree that it's everyone's responsibility, we quickly fall into breaking apart not-for-profit and for-profit and starting to say, well, for-profit is about making money, not-for-profits are about doing good. And what we really want to encourage is that we need a type of organisation that is actually able to have the power and influence of the for-profit sector, but do that in a way that has the ability to do good and the positive social impact of the not-for-profit space. And this is where all of our work around starting to take a marketplace approach comes in, because we're attempting to bring together these two things of for-profit and not-for-profit, or making money and doing good, and start to say, what is the marketplace approach that helps to deal with those things?
I'm going to stand.
Go
I
for
can't
it.
just sit. So summer of 2007, I had the privilege of swimming in this dam. You can kind of imagine jumping off the pier and going for a swim. And I was out there with a mate. We were trying to work out how deep it was and whether we were going to kill ourselves or not. And all of a sudden, just in front of us, this object popped up. And I couldn't quite work out what it was, but all of a sudden he screamed, "It's a platypus." And before we knew it, there was this platypus right in front of us. Now, I don't know whether you realise, but the male platypus actually has a very venomous spike on it. So while we're getting all excited about the fact that there's this platypus in the dam, we probably should have been more worried that we were going to be killed. But we weren't. We were just really excited about this really strange beast called platypus. Now, strange is absolutely the term for it, because when the first fleet was actually sent back to England, can you imagine what the response was? You've probably all heard the story, haven't you? They thought it was a hoax. They actually thought that some taxidermist in Asia probably had put the thing together and had sent it back to try and trick them. It's one of those stories you think about, Australia is that land of quite the unusual. And there goes the platypus back to the UK, and they're just going, what are those guys down under doing? They've lost their mind, and now they're just trying to trick us. And so it wasn't until 1799 that somebody said, okay, we're actually going to write this thing up. But even as he's writing it up and explaining this animal, he makes this statement. He said, it was impossible to not entertain doubts as to its genuine nature. It was a description of the platypus. And the interesting thing is that as we go around talking to people about taking a marketplace approach to solving the complex social and environmental issues we have in the world, I often feel like the person trying to convince some British naturalist that this platypus exists. It feels very similar to convincing people that you can take a marketplace approach and actually do good in the world. And it really just comes down to this. Can you do good and make money? When you have that conversation with most people, they all want to believe that this wonderful platypus is real. But most people harbour those entertaining doubts as to its genuine nature.
So, in terms of what we want to address today and look at as the real problem, we really think that it all starts with a mindset. Because if you go to the platypus example, and you go to the response that we have had many times, and I'm sure a lot of you have as well, around people doubting that it's possible to mix these two things and actually both make money and do good in the world, then ultimately, if we don't address the mindset up front, it's tricky to change the types of approaches and results that we ultimately get. So our experience at TDI has certainly been that one of the toughest things we face is attempting to shift that mindset. And for us, all of the work that we do and the approach that we take is based on our fundamental belief that blended value is possible, and it is the way in which we're going to be able to crack the size and scope of the problems that we're trying to address. So Trudy mentioned in her opening remarks how central blended value is to the work we do. It's worth us teasing apart for you a little bit about what we mean when we talk about blended value. There is a number of different things written here and there about blended value, and Jed Emerson is one of the people who's been speaking about blended value for a long time. For us, there's a few things that we like to draw out and make sure are clear in the definition. First up, it's about trying to have multiple aspects going on at the one time. So having, for example, a social or environmental and financial return in the one business model. It's also important, when we go back to that mindset piece, to talk about the fact that with blended value, we're not talking about compromising on either side. So we're not saying, okay, if you're doing wonderful work in the social sector, because of that, we need to compensate on the financial side. We're trying to drive to an approach that really is a win-win in both of those sides of the equation.
Be interested to know, when you hear that concept of blended value, maybe this is the first time or maybe you've heard it a while ago, just give me a word that's your initial response. Or you could not give me a word at all, but a word would be helpful. Anybody? Too good to be true. It's not a word, Emma, but that's close enough. Sentiment's good. Anyone else? Oxymoron?
Okay.
Yep. Sorry? Utopia, yep. Complex. That mindset that you start to have when you start to think about a blended value really affects how we design and how we execute in this space. And it's why we want to put the challenge out there today about what will it take to change your mind so that you don't, your initial response of utopia or oxymoron, complex, moves towards actually we have to and we can.
The other aspect of that for us in the work that we're doing is that it's this interesting thing that plays out where if you start with that belief in blended value and with that type of mindset, you actually approach things differently and you design different solutions. And what we're finding is that the difference in where we see organisations getting to and the types of outcomes they can actually deliver both to the beneficiaries of their programs as well as to investors has a lot to do with starting from that place that says, no, I believe you can have both of these things in the one organisation.
So, if our macro problem is going to looking at trying to solve some of these social and environmental issues that we're challenged with, so often when we get to the blended value thing, the simple answer to the problem is money. Because money fixes everything, apparently. And so we start with this financial first option. And what it really drives us towards is if I had enough money, I could fix the problem. And while that may or may not be true, the actual solution design is just as critical as any of the capital or money that we put towards it. We don't have unlimited capital, we don't have unlimited resources in the world, and we do have to prioritise and choose where we put them. And I think one of the really key challenges here is how we design our response. So if we take a money first approach though, we end up designing for finding money. And we've actually seen a couple of really good examples where the Australian government in particular has gone to the social sector and even to the commercial sector and said, why is it we don't have more social enterprise? Why is it we don't have more of this market-based approach to solving these complex problems that we face? And where are we? Where's your slide? Oh, you're already on. Oh, sorry, I wasn't watching. The CEDA funds is a really good example of where we've said, as a response to that response of we need access to more money, we need to find more money to solve these problems, we set up some funds. But one of the real challenges in the funds is there's not enough really good investments to put that money into. And so when the response came back that it was access to capital, it wasn't actually that the capital wasn't there, it was that the solution design didn't have the capacity of taking that capital on. What does that really mean? It means that we didn't build things that could access the kinds of capital that we had actually put in place. And generally speaking, we're talking about the kinds of capital that's looking for a return on investment, both financial and social. This isn't grant money, but we're looking for investment money. But in order to take on investment money, we had to build really robust blended value organisations to be able to take it on. And the missing part in the puzzle wasn't the money, it was the entities that could be invested into. And I'm sure you're all sitting there saying, mine's investable ready, I can take the money, yeah? Anybody ready to take on some money? Do you want to add anything?
No.
The other interesting place where a financial first approach comes in, where we think money is the issue, is the social bonds. Anybody very familiar with social bonds? Nobody's very familiar. Nobody wants to claim they're really familiar because you're worried I'm going to ask you a question. So social bonds are a really interesting response to how you deliver what often is seen as government responsibilities or government services really effectively and efficiently. But it's even interesting to me that they're called social bonds because there was lots of engineering done around the financial component of this. So this is how a social bond works. Essentially, the government identifies an area, well, it doesn't have to be a government, but in Australia's cases they have been. They identify an area where currently they're procuring services to try and resolve some kind of issue. And the out-of-home care, or what we used to call foster care area in Australia, is one of the classic examples of this, where the New South Wales government worked out that it was actually costing them a lot of money every time that they had an out-of-home care being done. And so keeping a child with its biological family was actually much more economically valuable than having it removed from its family. So ironically, we put a price on that and they're able to work out exactly what that's worth. The next move in that is to say to somebody who can provide services to keep a child in its biological home, if you can provide those services and prevent an out-of-home care, we'll essentially share some of the upside of that with you. Now that part of the design is fantastic. It's what we call payment by outcome. So I will pay you when you produce some kind of social or environmental outcome. The problem is you have to do the work before you get paid. So then you need a financing piece. And this is where the bond comes in. A set of investors will give you a set of money, bucket of money I guess, that you can go and spend on the activity you need to produce the outcome. When you produce the outcome, the government or the other person that's employed you, I guess, to produce the outcome, will then pay you for that outcome. Now, the investor gets a return on their money and hopefully you get paid for all of your services as well. So it's an interesting blend of finances and payments and how you set up payment and contracting services. But the really disappointing thing often with social bonds is it starts with the finance first. The really interesting part about a social bond, the innovative, great social innovation, if you like, is actually the payment by outcome. And in lots of ways, we should call them payment by outcome contracts. Then there's a financing piece. But unfortunately, we start with the financing piece. And in fact, a lot of state governments at the moment are going out saying, we want more social bonds, and they actually mean the financing piece rather than necessarily the payment by outcome, and miss the true genius of what this kind of contracting arrangement offers. Again, it's just missing the real problem. So the real problem isn't a lack of capital to make these kind of products work. The real problem was how we contract from a government perspective to produce outcomes rather than contract just for services. The innovation is there, but we're driving it a little bit too strongly from a finance-first perspective.
So with that finance-first approach, as we said with the first slide around the CEDA for Social Enterprise Development Investment Funds, it's not that these approaches or attempts at solutions are bad. They are attempting to, and the intention is good, attempting to try to address what they see as a gap. And yet it is this tendency to go finance first that is actually limiting the types of results that they can ultimately have. So whether it's in the case of the lack of investable business models or in the case of the bond, the idea around shifting to a payment by outcomes approach, that nuance is actually important in terms of the ultimate outcome that we're able to generate. The second piece that tends to be a focus that can often then be unhelpful is that we have this obsession with profit, a profit focus that really on a number of levels is unhelpful and limiting in the way that we try to address social and environmental problems. The aspects around this come to, we talked before about the for-profit versus not-for-profit. There's a lot to answer for in the area of definitions because they can drive our focus on things that ultimately are not helpful. One of the things that we have a bit of a pet hate about is the focus on the reinvestment or distribution of profit. And I'm wondering, Paul, if you want to try to break that myth a little bit about why that is unhelpful and doesn't actually tell us what we're trying to find out when we look at profit.
So profit is a really interesting thing in any organisation. Any of you work for an organisation that's not profitable? I'm really sorry, guys. Because even if you work for a not-for-profit, you want it to be profitable, right? Yeah? I guess we can help get some connections with Centrelink for you later. Yeah? Every organisation, in order to survive, has to be profitable. Now, there'll be times when it's not, but overall, an organisation has to be profitable just to survive. And it's a really important component of the health of any organisation. And that, as I said before, is regardless as whether it's a government, a not-for-profit or a for-profit. Any institution can't spend more than it has coming in. Even as a household, you can't do that for very long. Debt is a helpful way of fixing it. You might get, a nice inheritance. But at the end of the day, you can't spend more than you've got coming in. So profit is a really interesting part in that it actually tells you a lot about the health economically of an organisation. But how we use profit seems to become the focus. And while I think looking at profit as a mechanism for saying, here's how you can do good in the world, I'm really interested in what happens with all the other dollars in an organisation. So I just want you to think about your organisation for a moment and imagine it was profitable, for those of you who it isn't, or the fact that it is profitable. What kind of percentage of every resource dollar that you have within the organisation is actually profit? My guess is it's probably no more than 10%. If you're really lucky, it might be 20%. And for some of you, it's probably down in the 1% and 2%, right? So of all of the dollars spent and going through the organisation, only a very small percentage of it is represented by profit. And while we can talk about, well, what happens with the profit, we also need to be able to talk about what happens with all the other dollars that are being spent in the organisation too. And what's their capacity to produce good or at least reduce harm on the world. And so that our focus on profit takes us away from asking the hard questions about what the organisation is doing. And in some ways can end up being a profit wash. If we do something good with our profit, it almost doesn't matter what we do with the rest of the organisation. And we see this in not-for-profit just as much as we do in the for-profit world, in that a not-for-profit can structure expenses so that there isn't any profit in just the same way that a for-profit can structure its expenses so it doesn't end up with too much profit. And we forget that it's not just the dollar after the profit line, but the dollar before the profit line where we should be asking questions. So first of all, let's ask the question about all the dollars in an organisation, not just profit. Because what ends up happening when we focus on profit is we design really interesting organisations where they do good because they give away a percentage of their profit, or they reinvest a percentage of their profit back into doing good. And while this is a helpful first step, if all we focus on is a percentage of all the profits, then we're limiting the amount of impact that we can have to actually start addressing complex social and environmental issues. But we also miss the opportunity to ask, what good is our organisation actually having? So it's not that focus on profit is bad, but it is that if we only focus on profit, we're missing the bigger picture. The other interesting thing about profit for me is that what does profit actually do? And in a for-profit sense, and not quite so much in a not-for-profit sense, what profit does is pay for capital. It's actually paying people for the capital they've put in order to generate the organisation's program, services, product, etc. In a not-for-profit sense, it's all okay if you put debt in there and you pay for the debt, right? So if I loan a not-for-profit some money and I charge them interest for that, somehow that's seen as okay because it's not coming out of profit. But if you put it in, and the same in a business sense, if I put money in and I get paid for the interest, that's okay. But somehow taking profit and dividends out of a not-for-profit or a for-profit often is seen as bad. Many of you will have seen the news items every time one of our major organisations in Australia, one of our major businesses makes a huge profit. Does anybody get upset about that? I don't. And let me tell you why. Because 9 times out of 10, it's actually going back to you and I. I was trying to find the stats on NAB, so I'm going to have to actually ask the guys at NAB. But the last time I looked a few years ago, it was something like 60 to 70% of the profits of this bank actually go back to you and me, mum and dad, investors in Australia. Because superannuation funds and the institutions that actually make the investments in something like NAB see that money come back to us in our superannuation funds. Anybody got a super fund that may have an investment in something like here? A number of you will. And sometimes we miss where profit goes in the system. And again, so the focus on the profit becomes a problem in that we don't really understand what it's doing in our society and in our community. But in some ways, I don't really care how much profit NAB makes. I'm really interested in what the core business does because there's so much more resource and energy and time spent there. And I'm really pleased that they're a partner with us around saying, how do we be more of a blended value organisation? How do we make sure that the impact of investments actually is taken into consideration? So that difference between focusing on profit and focusing on the whole organisation is a really important one.
I think it also, that focus on profit really limits and keeps us in a space that means, whether it's social enterprise or impact investment, that it will always be niche. If we don't take the approach that says, okay, let's open this up, let's crack some of these mindsets and approaches that we have on things we focus on, we will never get to any kind of scale of being able to access the broader capital that's out in the market. Jeremy Nichols, who works with the Social Return on Investment Network in the UK, often speaks about the fact that at the level of your board, you need to be asking the organisation constantly, are you doing as much as you possibly can with the resources and capacity you currently have? I think we often kind of focus on we could do more if there was more in the system, but I think this kind of approach that says don't just look at the profit and what can be done with that, but look at your whole organisation, helps us to have that accountability that says, are we driving to get the best possible outcomes with what we do have? And I think that's quite an exciting approach to take.
I think this one also has a personal challenge. When we focus in on profit as the opportunity to do good, think about that personally. When I make X, I will give back. Have you ever heard that? I mean, I know you haven't said it, but I'm sure you've heard other people say it. You know, when I've got this surplus, I'll do some good with it. And that personal approach, focusing on the profit or surplus that you have, can often then play out at our institutions. So part of my challenge to you is to think about all the dollars you spend and invest, not just the surplus you have to give away, and think about what good you can be doing with that as well. So that very personal focus on profit is not dissimilar to how the focus on profit becomes an unhelpful way of seeing the world in our institutions, organisations and corporates as well. So the third area that we think often gets focus that isn't always that helpful is, well, we are doing good, so somebody's going to pay us. We are doing good, and it's more important than the money. And this is a real challenge in that if we start designing organisations just to do good without thinking about that economic piece, the blended value we talked about before, you end up in the place where it's unsustainable. And we could create great programs that actually could bring about fantastic change in the world, but because they're not economically viable or sustainable, we end up not actually being able to carry out that great program. So again, for us, the blended value overlay is really important. If you're going to come up with a great way to improve the world, you need to embed it in a model that is economically viable, economically sustainable. And the more economically sustainable it is, the better your chance of being able to scale that impact. It's great that you could do something in your local street, but what about something you could actually scale to the whole world? Well, that's going to require that blended value approach. We're not against granting. We're not against the kinds and forms of capital that are free, or at least sometimes people think of them as free. If you've ever applied for a grant, you'll know that they're hard work. But it's not that we think that granting is at all a problem. In the IT industry back in the 90s and early 2000s, there was lots of granting going on to help that industry get off the ground. Lots of incubators, lots of capacity building, because both government and the commercial sector realised that the IT industry had a great opportunity to leverage fantastic IP out of Australia, help cultivate some great talent, and ultimately be economically viable. So there was granting going in, not because it needed granting at a permanent level, but there was granting going in to get something off the ground. And I actually think this is one of the places granting has a fantastic opportunity in this space. In the social enterprise and impact investing space, there is a fantastic opportunity to help get this off the ground. It's why Donkey Wheel is a grantor and an investor in this space, because those things can go together. And it's getting that leg up rather than being permanently grant addicted, if you like, but the ability to get the leg up to get to commercial viability. And so we see granting as a really important thing in this sector, but for an outcome that's designed to be economically sustainable on its own at some point in time. It's that focus on the good. We're doing good, we don't have to worry about the economic model that goes with it. It'll work itself out. Somebody will give us a grant. Grant reliance becomes a problem.
It's the compromise piece that we don't want in the blended value kind of approach.
And I guess ultimately that's what we're trying to say, is that not that focusing on profit or focusing on the good that you do is the issue. It's just that when you only do that, you miss out on what you can actually get from a blended value organisation. Healthy, sustainably growing, hopefully scalable organisation that also does good for our society and communities and for the environment. And ultimately, that's kind of the design challenge for us, is to keep those two things in harmony all the way along. So, you can focus on the money as the first option. I can do good when there's some money there to actually make us do good. You could focus in on the profit and say, well, we can make this sector work if we design for how is profit going to be used. We can have a not-for-profit entity or a for-profit entity. Lots of talk about new kinds of entities that could take on capital and pay for it, but have mission lock and asset lock and ways of making sure that the operations of the business are still focused on doing good while having some limited but access to capital. That's what happens when we focus just on the profit piece. We could also then just focus in on the good. Here's the good we do, and the good we do helps us drive forward and it makes a really positive change in the world, but we won't worry necessarily about getting that blended value with the economic realities of making a really viable organisation. So it's these three things that we think are three of the focus that become the real problem. Now, there are others, but these are three that we run into all the time when we talk about blended value. And blended value has that real chance, I think, to bring about substantial change. But these kind of focus sometimes distract us from being able to focus in and then name the real problem and design for a great outcome.
In terms of that shift that we're wanting to see towards focusing on the outcomes that we can generate, I think as that conversation moves and we start to think more about taking accountability for all of the outcomes that we are creating with the capacity and money that is in the system for us currently. A quote from Kathy Clark, Jed Emerson and Ben Thornley's new book, The Impact Investor, I think is really helpful to have in the back of your mind as a bit of a challenge in this space, where they say that our world is littered with well-intentioned initiatives and allocations of precious capital to underperforming strategies. We would be well served not to lead with our press releases and events, but rather let our actions and results tell the story of our work. And I think that we would really encourage that kind of shift in focus and an attempt to drive to outcomes in this space.
It's a little bit like the platypus. Anybody ever heard of a black swan? As I walked up this morning past Victoria Docks, there was a couple of them swimming in there quite nicely. I don't know whether anyone else saw those this morning. If you were a 16th century Londoner, you probably would have used the term black swan to talk about the impossible. Now, you'd had hundreds of years of only seeing white swans. And a couple of poets had actually coined poems where they talked about the black swan as a definition of the impossible. Of course, you and I know a little bit better, only because we live in the land of the black swan. And so in 1697, they discovered the black swan. And it really did throw a little bit of the establishment into chaos, because what previously they thought was impossible all of a sudden didn't just become probable or possible, but became actual. And again, a little bit like the platypus, I often feel like social enterprise, impact investing, blended value organisations, when you talk to many people, you get the response of it's a black swan. I've only ever seen for-profit organisations or not-for-profit organisations, and never the twain shall meet. And a very senior bureaucrat actually said that to me. Also had very senior philanthropists tell me that the idea of having a blended value organisation is like putting jam and Vegemite on your toast at the same time. They don't go together very well. Does anybody actually like jam and Vegemite on their toast? No. There is resistance. There's a, I don't believe it, I haven't seen it, it can't be true, that occurs within this sector, but also when you then talk to people. That is true here in Australia and it's true around the world, that somehow we just can't quite conceive. We want to believe that a black swan exists, but we can't quite conceive that it could possibly be true. Could you actually make money and do good? Our big challenge to you today is to allow your mind shift to happen so that your mindset is one that not only believes but starts designing for, working towards and helping create blended value organisations that really can change the world. Let's prove that the black swan isn't an impossibility, that social enterprise can make a substantial and large difference. And in lots of ways, we look forward to the day when social enterprise is not a term that's used anymore, that we just use the term enterprise. And in much the same way as occupational health and safety has become the norm in an organisation. You know, it wasn't that long ago that it was a little department that worried about the safety of the employees. It wasn't that long ago that we didn't care. I had the privilege of going through the Panama Canal just 12 months ago, and there was a massive feat of engineering where we really didn't care about the lives of our employees. 25,000 people gave their life for the Panama Canal. The new locks that are going in, big safety signs everywhere, number of days since last incident, accidents, incidents, what happens, what do you do when something goes wrong? The preventative sense of occupational health and safety in an organisation is huge. And that's just in a very short number of years have we gone from we didn't care to a little department somewhere to we don't talk about an organisation that has health and safety because we just expect it. My hope is that that will become true about our black swan of blended value, that we didn't really care about our social and environmental impact. We started to create little departments within organisations, things like corporate social responsibility or environmental departments. But then I hope we move to where it becomes everybody's responsibility. And we don't name an organisation as being sustainable or being social. But in fact, maybe we name the organisations that aren't environmentally conscious, socially conscious, or doing good.
So if we have that shift in our mindset and start to approach things from a place of blended value, what are the types of solutions that we then can see? What do we have to create?
I think our challenge simply comes down to how we design. The world we live in, primarily, the issues we face are the result of things we've designed. Yeah? So as a human race, the majority of the challenges are the result of the things we've designed. You think about that, they're constructs that we have created. Therefore, they're also constructs that we can recreate. We can change our approach on. Health and safety is a great one for me, where we changed our approach. We actually said it's unacceptable for somebody to die at work. I want us to get to the point where we say it's unacceptable for us to run organisations that have a negative or even just a neutral environmental or social impact. But what that's going to take is for us to actually design organisations that can do both. And that may mean redesigning some of our corporates, and it may mean redesigning some of our not-for-profits, and it may mean redesigning for a new kind of outcome, one that actually delivers a return on financial investment and delivers a return to the community and the environment in which it operates. At TDI, anybody familiar with this? I know it's a little blurry, but anybody familiar with that? Just put your hand up if you are. Okay, this is the business model canvas. We use this as our framework for looking at and thinking about the design of an organisation. It's one model, and it works really well for us. But what really is important here is that we're intentionally designing for an outcome that is both financially sustainable and socially and environmentally sustainable. That is the key here. And we think the real problem is we just don't design that way often enough. That we allow ourselves to say, we'll build an organisation and when it's profitable, we'll think about how we use the profits to do good. Or we'll build an organisation to do good and have no sense of how its economic viability will happen. Or we say when the money comes, we'll work out how to make it work. I think there's a real opportunity, and I want to encourage you guys here, particularly here, and also streaming and wherever else around the world you are. We can design organisations that can deliver blended value, that actually deliver a social and environmental return alongside a financial return. Does anybody actually believe in the black swan? But we've got two. Thank you. Two's good. We'll start working on the rest of you. Black swans are possible. Blended value is possible, but we have to design for it in the first place. And this, we think, is part of the solution. If we can name the real problem is we have to have our organisations doing both environmentally and socially strong, and financially strong. If we can do that, we have an opportunity to really shift the world and move things like social enterprise and impact investing from the niche to the mainstream. To move our mainstream from not caring sometimes about social and environmental issues and moving that into the core business. It's that shift that we want to see, and we do believe that blended value organisations can deliver.
Right. We're going to go to some questions now so that we can make sure we've answered whatever the burning questions are for you guys around this topic. And I think Trudy's also, she's got a microphone over there, and will be, if there's some questions from live stream, Trudy can read those out as well. Anyone got a question?
Click.
As Trudy said, if you don't want to say it out loud, you can tweet a question. The real problem is the hashtag.
Does this mean everyone understands everything that has just been said? Surely someone wants to clarify.
Up the back.
Hi there. Yeah, just interested if you could talk to any really good examples of blended value that you've seen out there and how they came about.
The good thing is we're starting to get some black swans that we can actually get swimming around and show people. So that is one of the helpful things. I think one of the really first ones in Australia was Good Start, and it was actually a good start. The pun's a little bit too, easy to roll off the tongue. So Good Start was the acquisition of the ABC Learning Centres, so childcare environment, by a set of not-for-profits, but also a whole lot of commercial money that came in as well. And was one of those first instances where we saw essentially a corporate that really didn't take childcare seriously other than to make money, and saw that we could actually make money and do good. In fact, a number of the investors who came in the first instance really didn't think they were going to get their money back. It was a set of not-for-profits buying a commercial business. Well, obviously, it'll never be economically viable. But, to their credit, they ended up with a really strong blended value organisation. And I think it's a great example of where the investors actually got their return. They weren't expecting to, but they did. And it's now run as not just some kind of, somewhere to store our kids while we're working, but it is actually an early education space. And you think about the social impact of what we do with our kids when they're young, that's huge. So that kind of transformation, I think, was a good example. Now, that was a one-off in some ways. Hopefully we might get to do another one-off. But it probably wasn't in the same space of being designed for that we would now hope that we can. So if you want to go and have a look on the web, you can see examples like Team Wild, like Street, which are two of the examples that we've been involved with that demonstrate that commercial viability and doing good example. So there are a few around, but unfortunately there's more white swans than black ones at the moment. Come on, there's never no questions at the end. That just means you didn't understand a word we said.
Hello.
Hi.
You've talked about the not-for-profit space, you've talked about the investor space, the government, the bureaucracy space, but how about the for-profit space?
Yeah.
I was just going back through, KPMG did a report last year that said that companies make about $12 billion in social investments, but it's sort of an own goal because they don't recognize it or put metrics around it. How do you take this idea of the blended value, addressing the real problem to the for-profit space to pull them in this direction?
Absolutely. And for us, it's not an either or, it's a both and, which is, I guess, blended. For us, the not-for-profit space is the not-for-profit space is the space that's often seen as the space doing good. And to be honest, the for-profit space doesn't get the credit due for the good that it does often within its business and doesn't even realise it. It's just doing it because it's good business, or because there's people of goodwill within the business who just make it happen. Most businesses in Australia are not set up purely to make profit. Most businesses are set up by a passionate person who really want to see something change in the world. Profit becomes a mechanism for them to get there. And I guess it's helping the for-profit sector actually understand its impact and see the opportunity to even do more good. that's probably the most exciting space of all. So working with NAB as they look across their portfolio and they start to realise they've got all these impact investments that they've never really called impact investments. Now, as you get more intentional about that, you can leverage those stories and show you can make investments that have return and meet the normal credit kind of credit rules that the bank will have. But, oh, you know what? There's actually some good happening here. When you think about our retail organisations or logistics organisations, manufacturing organisations in Australia, they all have the opportunity to do good. I think at the macro level, the easiest explanation of that is if we look at the Millennium Development Goals. Most of those goals have been not reached, but at least heading towards being reached, as much by what the commercial sector is doing in the world, the economic improvement in the world, as has happened by governments and not-for-profit. So there is a real contribution that the for-profit community has into this space.
And I think as we kind of shift towards demonstrating that the black swan or the platypus is real, it then allows corporates and others to actually see the ability to engage in ways that go beyond CSR or some kind of token piece, and as we talked about in the earlier examples, can start to take it into their broader, core business. So for us, it's kind of, there is a spectrum, and we're trying to paint a picture with an argument around blended value and then start to demonstrate and have the case studies that help shift some of that. But it is an emerging space, and we're trying to, build this marketplace as we go. So there's a stack of things that are having to happen for that to work. Up the back. Oh, yep, middle.
Do you think social enterprises could be publicly listed companies with the current legal framework?
Absolutely.
For sure.
Yep. A lot of the legal framework conversation centres around trying to lock in the mission piece. Our corporate structures absolutely allow for doing good and making money today. Most people are concerned that what will happen is that when the entity starts making lots of money, it won't do the social good anymore. So trying to find that blended entity that locks in the mission and still allows for access to public or private capital is kind of the big challenge, I guess, in the legal space. I think the other thing is, it actually gives us, if we could have a third entity, an entity that was mission-driven and yet still allowed for profit, it would help with the marketing. We'd actually be able to name a black swan rather than a for-profit or a not-for-profit entity. And so there is a sense in which helping people's mind shift happen could be signalled, if you like, by having a legal entity that matched those kind of intentions. My argument is we don't need it. Yeah. We can actually quite well survive and exist in the environment we have in Australia, but it's not to say it wouldn't be helpful.
A question over here.
Yeah, I'm just curious if you have any thoughts about the Newpin social benefit bond in terms of the finance first issue that you named.
So both of the two New South Wales bonds that have been issued were really driven by the fact that there was lots of financial construct in there, and in fact, in my opinion, over-engineered from a financial perspective. The real beauty of the bonds was the payment by outcome bit, and yet that's not the part that's really pushed. So even though the New South Wales government's come out and said we want to do 2 bonds a year for the next few years, in the conversations with New South Wales Treasury in particular, it's all about the finance piece. And whereas I think if we could actually understand the payment by outcome piece, get the blend in there really well, we would be able to design better outcomes. And why I say that is, I think there are some organisations that wouldn't need the bond to actually be able to do a payment by outcome. There are also other ways other than a bond, and without getting too technically finance-wise, it's not even really a bond anyway. It's really just a finance mechanism. And I guess, again, from the design perspective, let's design for the outcome we want, which is payment by outcome. Then we can look at how you finance that. But at the moment, essentially, the governments are going out saying, well, as long as you put a bond in place, that's the kind of definition of what's going on. Rather than saying, let's put a payment by outcome and let's let the market work out how to fund it. There'll be a whole lots of ways, from debt, from current balance sheets that organisations have, to potentially the kind of bond that we've seen. But in my opinion, they're slightly over-engineered for the outcome that we're going to get.
Rick had a question.
The idea of remodelling is a fascinating one. And so we have to remodel current for-profit or current not-for-profit. And there are real and emotional hurdles for both those sorts of organisations to undertake the remodelling. Are they the same? If they're not the same, how do you, who can move quicker?
Ooh, the last question is the easiest one to answer in that. There are multiple challenges on both sides, but who can move quicker? Unfortunately, I do think it's the for-profit world that can move quicker. And I say unfortunately, although I'm probably really excited about that idea. The for-profit world's the bigger player and also has the most resources, so I probably shouldn't say disappointed. But generally speaking, it's easier to find someone who has a great economic model and challenge them to think about their social environmental impact. You don't have to scratch too hard on a finance brain to find a heart. And encourage them to really think about their impact. So getting the for-profit sector to move, generally speaking, we found easier. And that's kind of true at an individual, personal level, but also at a corporate level. The not-for-profit sector has greater challenges around, some of it is around the fear of profit. And it is often more difficult to take somebody who has a great social environmental program, but without an economic engine that actually drives it. Helping somebody with great passion and heart get a commercial brain can be really tough. Obviously, the best one is when you blend the two, when you find someone who's really passionate and been able to design a great program with a person who's really financially savvy and can do that. Now, if you can find that one person, fantastic, but often pairing the kind of corporate sector off with some of the great program work of the not-for-profit and creating a new entity and remodelling at that point is where you can probably get the best upside.
And that's why we, in terms of Paul's response, that's why we're drilling into the aspect of mindset, because regardless of where you're coming from, if there is something that stops you from actually pursuing a model that does both of these things in one, then you can't crack it. But I think, as Paul said, if you've already removed any issue around a fear of profit or a tension that there is something wrong with making money and still being able to do good, then if you're from that corporate side and you actually see the opportunity, we often joke when we're talking with uni students and say, you don't have to have a career and be an arsehole till you're 65 and then decide to be a decent human being. If you actually have the opportunity from the beginning to live out in an aligned way what you want to see for your future children and the way you want to live your life in a way that still uses your commercial skills, that's exciting. So I think that proposition from the corporate side is actually quite tempting. And so that's where I think it speeds up that transition into seeing blended value as an opportunity. But the mindset shift is critical to be able to help bring some comfort and understanding, I think, particularly to the social sector to make that move.
That mindset is a really interesting one, even from the corporate perspective. We get lots of corporate executives who feel like they've made it and now want to give back. Hopefully they haven't been the arsehole all the way through the career, but they've been in the for-profit, it's been about the bottom line, it's been about making profit, I now want to do something good. And they often come to see me to say, well, how do I get onto a not-for-profit board so I can do good? And the moment you start challenging them about their mindset, about saying, well, why can't you do good where you are? Why can't you take the skills that you have and think about maybe re-engineering your organisation, starting a new one, doing something? Why does it have to have that dichotomy of I'll continue to kind of make money over here and that's my economic engine, but I'll do good over here by joining the board of a not-for-profit. Now, I don't want to take that away. We need lots of corporate people on our not-for-profit boards, as we probably need some not-for-profit people on corporate boards. But ultimately, if we could get away from the distinction and actually get blended value organisations, I think that's the best place for us to play.
Hi. I just wondered if you found the discussion that some corporates are having around shared value you find helpful leading into blended value, and if and how you distinguish the two.
I think in some ways, another comparison, because I think it is a spectrum and kind of a blending in across. I think that if you look at something like ethical investment in the early days and how people have gone from doing negative screens around their investments to positive screens, and now people are starting to look at impact investment. I see, the creating shared value play as certainly something complementary and as part of the spectrum. But I think there is distinction and difference between blended value and what you're trying to create there and shared value. So for me, shared value is one step further in the direction of what we're talking about than corporate social responsibility, because it's attempting to say this isn't a token thing on the side, this is using our core business in ways that ultimately have some benefit. But I think Paul is probably wanting to give some examples of shared value where in fact it doesn't quite hit the mark of blended value in terms of what we were talking about earlier.
I think it is that transition space. So shared value is often the concept of a corporate partnering with a not-for-profit and creating something in the middle. A number of the projects that have happened in Australia in this space have really just been about profit. Let's create some kind of profitable entity and get that profit off to the not-for-profit. And while that is a helpful step, I think it falls short of what we really could do. Fortunately, there's also been good examples where they've worked out that internally they could create new organisations internally to maybe target a specific disadvantaged group at using their core skills of the corporate. So what was intended as a shared value project actually became a blended value project. So there are a number of those that are happening around. I'd be happy to talk to you one-on-one about what some of those projects are that are actually happening. But shared value, I think, has the opportunity to lead into blended value. Yeah. And so, great, heading in the right direction, and let's do more of it.
Thanks, Trude. I have a question. So I work with people with a corporate mindset, and I have to bring the value side to it. Now, measurement of financials is pretty easy. So I was just wanting to maybe get your thoughts around the challenges of understanding how to speak the same language in a way of the blended value, the social and environmental value.
Sure. Can I just
go for it?
Anybody know Facebook? Now, there's a few bankers in the room. Just tell me how the thing's valued. How in the world did they come up with the valuation on Facebook? Anybody an investor in Facebook? There you go. Smart Aussies. Facebook's one of those great organisations that when you look at from any of the normal commercial kind of metrics, you go, how do they get that as a valuation? Right? So there is some value about Facebook that goes to the more intangibles. And although they're intangible, there's lots of metrics on it, right? It's how many people sign up for it, the connections made, transactions, page views, click-throughs, you know all the jargon. And if you don't, ask your kids. So Facebook is a great example for me of where the pure financials don't explain the organisation. And so often we get caught in the blended value space of trying to work out how you get the kind of language that normal bankers would use, financial institutions would use, or even just normal corporates would use. But we miss that corporates actually have become quite good at those kind of key performance indicators, or net promoter scores, or a whole lot of non-financial indicators that have become useful in describing the organisation and have directly fed into their valuations. So if the number of people using Facebook drops, their valuation drops, even if their revenues don't change. And in the same way, I think we can have metrics and ways of talking numbers, because numbers are the language, if you like, of economics. But we can take non-financial numbers and use those to communicate. And I completely believe that's true in the for-good space as much as it is the for-profit space. There are numbers things like the amount of carbon dioxide in the air, that tell us something about the environment, and that coming down or going up means something. And in the same way, I think we can come to a set of language that's really helpful for people, and numbers is a great way of doing that. That's part one. The other thing I love about the corporate space is the corporate space never stop at numbers. They always extrapolate out a story. And in fact, the best CFOs I've ever worked with are the ones who can take a balance sheet or profit and loss and actually tell you a story about what's going on in the organisation. It comes to life about what has happened, what's going to happen, because the story the numbers tell. And it's actually the thing that the not-for-profit sector is brilliant at doing, is telling stories about the work that's happening. It's how they actually fundraise, get donations, get grants. Is the storytelling. So again, the blended value piece kicks in really strongly here for me, that I think the best ways we can communicate backwards and forwards is both learning to collect and report the numbers, both financial and non-financial numbers, but also then turning those numbers or telling the stories about where those numbers have come from. So again, the best financial officer is one who actually understands what that number means and can tell the story about it. So the way I think we can communicate in blended value organisations is to have both. Numbers, financial and non-financial, and stories that go with it.
And if you take, that spectrum we talked about before of, say, ethical investment, where you certainly have the intention of looking for the types of investments you either don't want to invest in or do want to invest in, impact investment is moving to having both intention and measurability. And so there is a stack of work that's going on around starting to tease out what should that look like, how do we do that? But it is an emerging new kind of space. And I think in the meantime, as that's building in credibility and the robustness of the measurement side, if we do have organisations that have this investable aspect to them, then even if colleagues can only get their head around do the numbers stack up, if the business model stacks up on the financial side, they can begin to engage simply from the financial side and then gradually come around to the social or environmental story. So I think that we can still start to shift the dial. We're going to have to leave it there because it's 9 o'clock, so I'll...
Liz, we do want to respect your time.
Thank you, everyone.
Keep using the hashtag, though. We will try and get to questions if you've still got some that need answering. Tweet about it, and we'll get to it in blogs and different posts in the next few weeks and months. Just a few things. Next forum is on the 5th of May. Grab a postcard that's on your table. Once you put the dates in your diary, hand that postcard on to someone else. That would be great. Also, there's a little sheet if you've got 2 minutes just to put down some thoughts, some feedback on this morning. That will be really appreciated. And if you want to know a bit more about what we offer in particular, there's one of these just over there behind the food, which leads me to my next one. Take a breakfast sandwich on your way. We've got time in here, though. Grab a coffee if you still need a bit more to get you going. Continue the conversations, and thank you so much for being a part of this morning. Thanks.
All right, thanks very much for joining us here on the broadcast today. Failing to Name the Real Problem, hosted by Bessi Graham and Paul Steele. I had a guest on the show here earlier today, Isaac Jeffries from TDI. Thanks very much for tuning in. We encourage you to continue joining the conversation on Twitter on #TheRealProblem. And we'll be doing this again on the 5th of May is our next breakfast forum here, hosted from NAB Hall. The importance of knowing your audience. Impact investors and social impact measurement. Everybody's talking, but are we capturing and reporting on what really matters? So that's the next topic here. Once again, thanks for tuning in. My name is Mikey from Digital Storytellers, and we look to see you next time on the live stream.